Airbnb stock is currently in the midst of a huge sell-off. Now, first off, we can see over the past year, they're down around 14.73%, but if we look at them in the past month alone, they're now down almost 23%. So around 30 days ago, they were trading as high as around $147 per share, and now all the way down to around $113.62. Now, one of the things we have to keep in mind, this company hasn't been around very long. In fact, they just recently IPO'd on December 10th of 2020, so really not that long ago. Now, the reason for this huge sell-off is a pretty poor earnings report. We can see Q2 GAAP earnings per share of 86 cents was a miss by around 5 cents, and revenue was actually up about 10.9% year over year and was a slight beat by about 10 million, but despite that, shares were still sold off at around 14%. Now, one of the things we have to understand is they also issued pretty weak forecasts moving forward. We can see the company forecast revenue to increase 8 to 10% to 3.67 billion to 3.7 billion, which was below expectations of 3.84 billion due to sequential moderation in the year-over-year growth of nights and experiences booked relative to Q2. Now, if we jump over to our stock screener, and like always, you can download any of the spreadsheets you see here and also get access to the ticker data add-on that allows you to automatically import stock financials straight into your spreadsheet at tickerdata.com, link in the description. But if we come up here and plug in ABNB, the stock ticker for Airbnb, first off, what we'll notice is the company doesn't pay a dividend, and it definitely shouldn't right now. This is such a new company to the market, and they're still in their initial growth phases, so no surprise they don't pay a dividend. They definitely shouldn't even consider that yet. Now, we can see revenue for this company is actually growing at a decent rate, but they did just recently become profitable. In fact, 2022 was actually their first year with positive earnings per share. Now, this is somewhat common for companies that have recently IPO'd. A lot of the times, there's a lot of growth priced in. And for example, actually, if we go back to Seeking Alpha, look at Airbnb since they IPO'd. When they IPO'd, early December of 2020, they opened at about $68 per share, and just a few months later, they actually climbed as high as about $211 per share. So there is a lot of excitement around the stock, but what we've seen over the past 5 years is excitement slowing down quite a bit. There's a lot more uncertainty with Airbnb, a lot more competition, and if you've been paying attention to user experiences with Airbnb, a lot of people aren't excited with how expensive their services have been. You have to pay cleaning fees, there's other types of fees on top of the initial expense just to book your place. And a lot of those reasons have led to the sell-off, including the bad forward-looking statements from Airbnb in the recent earnings report. Now, as of right now, based on 2023 free cash flow numbers, we can see the company has a free cash flow yield sitting at about 5.3%. Now, technically, this is supposed to be a high growth company. This is supposed to be a company that's rapidly growing their earnings, free cash flow, and revenue per share. But the market isn't currently pricing it like a growth stock. And let me show you what I mean. If we jump over to a reverse discounted cash flow analysis model, again, all this data automatically loads in based on the stock that we plug in right here. So for example, if I come up here and plug in KO, we can see all this data will load in. But if I come up here and plug in ABNB, stock ticker for Airbnb, once again, this data will automatically load in. Now, the idea behind a reverse discounted cash flow analysis is what we can do is we can see how much free cash flow growth the market is pricing into Airbnb right now. So for example, we can see if we don't apply any growth to the free cash flow, basically what the market is telling us is Airbnb is worth about $89.58, but the company is actually currently trading at about $113.62, meaning the market is pricing in free cash flow growth. So what we want to do is see how much free cash flow growth is priced in and then ask ourselves the question, is that free cash flow growth rate justified? If we think free cash flow will be higher, then that basically means the stock is undervalued, and if it's going to be lower, then maybe the company's overvalued. So let's go ahead and get started. If we plug in a 10% free cash flow growth rate, keep in mind, this is supposed to be a growth company. What we can see is we come to a reverse DCF price per share of $172.63. So the market is telling us they're pricing in a lot less free cash flow growth than 10%. So let's slow it down. Let's bump it down to 2%. We actually start to get quite a bit closer to that current price. If we bump it up to 3%, we can see reverse DCF price per share of $108.77. And if we bump it up to about 3.7%, we come right to the current trading price, about $113 per share. So what this reverse DCF model is telling us is that the market is pricing in free cash flow growth of about 3.7% to Airbnb. Again, the question we have to ask ourselves is that justified? Because if we think it'll be higher than that over the long term, then technically the company is undervalued. If we jump over to my dividend breakdown sheet, we'll come up here and plug in ABNB. A lot of data is going to not load in, and that's because the company doesn't pay a dividend, like I mentioned. But the reason I wanted to use this sheet is because it shows us how free cash flow has been growing over the past few years. And keep in mind, we only have data dating back to 2017. Now, free cash flow over the past few years has grown at a pretty fast rate. You can see in 2021, free cash flow about $2.16 billion. In 2022, jumped all the way up to $3.4 billion. and in 2023 about 3.8 billion. So really, since 2020, free cash flow has grown at a pretty high rate, but despite this, the market doesn't like what they see in Airbnb moving forward. So in my opinion, this is actually a pretty interesting situation that Airbnb has found themselves in. And if you're someone considering Airbnb, maybe there's opportunity here. Again, the key question you have to ask yourself is, can they grow free cash flow at a rate above 3.7%? So yes, Airbnb, a lot of bearish sentiment right now, but it'll be interesting to see what happens moving forward with this stock. Again, like always, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.